If the election was the starting gun for all of these institutions to look at this industry again and legitimize it, I think the market structure bill will be the starting gun for all of these things to actually come to realization.
This episode is brought to you by Aries Markets. To learn more about Aries Markets, follow the link in the show notes below. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2 holding down the fort today.
Save the best.
Are we going to make the obligatory cut the fat joke and just
every single time? No, Vance is off fighting the good fight in Switzerland right now. And maybe at some point in the not so distant future, we'll be able to share more details. But
by fighting the good fight, you mean eating chocolate and skiing?
Yeah, exactly right.
No,
I'm sure there's been some hikes and some skiing involved, but definitely a business trip and a lot more to share on that eventually.
Nice. Well, you want to do, I know we did a live podcast from ETHDenver last week, which was super fun, but do you want to just do another, I don't know, maybe just final recap of the conference, what your takeaways were having been there for a couple of days? I know we'd both just gotten there and basically spent one day or like half a day. It's like what your thoughts were for the rest of the conference, and then we can get into just like touching on market sentiment at the moment.
For sure. Well, I think my take on the conference was very similar to probably what everybody else is feeling with the general market malaise, in that someone on our team had a good line where he said it just felt like everybody was really tired.
Yeah.
And I think, roll back the tape a couple years and you're looking at 2021 into 2022, that was just like shell shock. And 2022 was like putting the pieces back together, trying to make sure everybody was default alive. 2023 was more putting the pieces back together and kind of reassessing, seeing who was alive and who wasn't. And 2024 was a lot of kind of stuff that was outside of our, the crypto industry's control. It was the election. It was, it was dealing with regulators. 2023 and 2024 were both that. I think a lot of, just anecdotally from institutions that we talked to, the big question for them with 2024 was, is crypto going to be around or is crypto going to die? And I think in a lot of people's minds, there was an existential threat to the future of crypto, at least the future of crypto in the United States. And I think that, with the election results and kind of the sentiment and things that have been talked about, and I'm sure we'll get into it, but the things that are happening literally like this week in DC, crypto's default alive. Crypto is going to be here. It's going to be an industry. It's going to be big. But a lot of people are pattern matching 2021 to 2025. And, when you're trying to pattern match and exuberance maybe leads faster than people are expecting, and you expect everything's just going to go up and to the right in this year time frame, it's pretty disheartening to have the Q1 that we've had, at least so far. And so, I think people were just kind of expecting 2025 to be the payoff year after a couple of years of really tough times. And it just hasn't proven to be that yet. I am personally, and I think, us collectively at Framework are of the belief that there is a real question as to whether or not the 4-year cycle, if we want to call it that, is fundamentally intact in the way that I think people are expecting it will happen. And what I mostly mean by this is macro is driving all markets right now. Tariffs, growth slowdown, things that are kind of outside of our control are overriding, what's going on inside the industry. Over 2 individual trading days in the last 5 days, NVIDIA has lost more than an Ethereum each trading day. Just think about that. It is tough out there in general, but crypto historically, and is proving to be the case as well, now is just the fastest horse in this process. So it's gonna go up fastest and it's gonna go down fastest. 24/7 markets, and I think people are kind of questioning some of the perspectives and dogma and views that they had going into the year, and it's always tough when you're like, we need to get this thing out, we need to launch, we need to do X, Y, or Z because this is the bull market, this is our chance. And if you're questioning those assumptions now, changes roadmaps, it changes perspectives. Your sentiment is lower. If even some of the more negative perspectives are like, did we miss the cycle? Is it over? And do we have another 3 years before we have another shot? Like that's just so short-sighted, and frankly, it just signifies in my mind that you're probably new here, and it yeah, it feels. I think once people start to really understand that things are going to go slower, it's going to be better, the outcomes are going to be bigger, but it's going to take longer. It probably is just a better time to be building. And I
That's what
think
I've been saying. This is a better time to be built. This is like a Goldilocks if you are, because the downside of those crazy, it's impossible to company build when you're going through one of these crazy spikes up because there's no filter for quality control. There's no, oh, you have to be building a viable product or a good team or whatever. It's just everything's going up, and it's like the most irresponsible person wins in the short term. So,
exactly.
it's a different environment, and it's a totally different environment. And but it also is just, I think there are a couple of things going on, right? There's a global story here, which is it's been a while since this has been a macro pod, but
oh, but we still have that muscle.
yeah, we still got it. And if you've been paying attention, I'll try to actually find it and pull up these, the Atlanta GDP now, but it sort of went from projecting 2.5% growth to like negative 3% growth very quickly. And now there are multiple successive prints that are backing this up. In a matter of basically a week or so, we're now pricing in 3 rate cuts. But if you're excited, these are not the good rate cuts. These are the panicky, save the market. Oop, the bottom is falling out from under us rate cuts. And it's also very funny is, so we're talking about doing these tariffs, and there's sort of a slowdown, and there's uncertainty, and markets just don't like that type of uncertainty. Over in Europe, Germany, which has basically been very austere since World War II, and they constitutionally, they don't run a deficit and all this type of thing. They have amended that, and they're going to run. They're going to basically start to finance and remilitarize, because the message from the Trump administration has been, you need to pay your own way, and so actually it's kind of causing European stocks to go on a tear. It's just like such an interesting.
Yes, they are bad rate cuts if they do happen, because what we're talking about, because it potentially means recessionary growth trends. But keep in mind, any rate cuts, while even if they are for recessionary reasons, are typically positive for assets. And once again, crypto is the fastest horse. I ultimately think rate cuts are good in the short term, so long as we don't go into anything deeply cutting, deeply austere. And I don't think that it's possible really for that to happen. I think these are just like the structural changes. Like this is the friction that happens when you come in with a new policy regime, especially something that's so different from what we've previously seen. And also just cutting all of that excess waste. Like there's going to be stuff that gets left on the cutting room floor, and that is part of the process of cleaning things up. And so I think that there's ultimately good coming from this, but for anybody who's a builder out there, I think the sentiment needs to shift from I need to do this in the next 2 to 3 quarters to I have the next 2 to 3 years.
This episode is brought to you by Aries Markets. Aries Markets deployed on Aptos in 2022 and is now the largest lending protocol with $280 million in TVL. To learn more about Aries Markets, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more. Yeah. Okay. Let me, can I try a theory out on you here? Because it's something I've been, and it's going to sound like insane cope, but I actually don't, but just listen to this. I'm going to back it up with some amount of facts here. So, I mean, one thing that I was just sort of crypto's reaction to the recent macro developments makes a lot of sense. Like one interesting way to look at Doge maybe, and I think Steve Cohen was the one, there was a really interesting clip of him saying he was a little bit bearish, is Doge is a form of austerity. And that actually is a huge part of the platform and the campaign that Donald Trump is running on now, which is we got to get our budget back intact. And it is funny because that kind of should be bearish to Bitcoin. Like the whole, the whole driving narrative of why Bitcoin should be doing well is that governments are debasing their currency. So if the largest economy in the world is getting their shit together from a budget standpoint, maybe that isn't actually super beneficial for Bitcoin, at least in the short term. The other thing that's been pretty interesting is listening to Scott Bessent, the Treasury Secretary, come out and say that it's possible that the stock market correlation, stocks might be a little bit, stocks and asset prices like real estate might be too high. And we might want to create, an opportunity for, I think the exact quote that he said was, Wall Street has won for a long time. They're still going to do okay, but it might be time for Main Street to win, implying that asset prices are too high and we have to get, we want to let basically the next generation, the new generation, get a entry price. And then at the same time, they're also aggressively kind of trying to pump crypto, right? Like they announced this crypto strategic reserve. They are doing a bunch of very favorable things. They're trying to make it the crypto capital of the world. They're talking about potentially eliminating capital gains tax on crypto. I mean, they're doing a whole bunch of stuff.
Yeah, would love to see it, but never going to happen.
I know.
But okay.
But I mean, okay, so put all of these things together, right? Like Trump is a guy who understands who his constituency is. He actually does well, better with younger people. There was a really interesting clip of him coming on at a sports game, and all these like young people are cheering, which is super interesting.
The Super Bowl.
Yeah, the Super Bowl. And in my mind, actually, or in his mind, like the crypto was a huge portion of why he won the election, right? Not to make ourselves too self-important here. And so if you kind of put all of these things together, there could be a wealth transfer going on, right, in this administration's mind to shore up his popularity from, more traditional asset owners into crypto holders. Like, I know that's, I only barely believe that. I'm not even, but I'm just, it's kind of an interesting thing to think through. It's not totally.
Look, I think it would be, I think smart and fast moving perspectives, but probably still limited in terms of the global amount of dollars moving into Bitcoin, have the perspective of let's buy Bitcoin because it's digital gold and it's a protection against, basically governments. I think that that's a small portion of why a lot of people hold or are buying Bitcoin. I think a lot of people just recognize this as a new asset and a new category, and frankly, probably also tech connected or aligned. And look, the correlation between Bitcoin and the NASDAQ is extremely strong. And I think that kind of tells you everything as to how most people view this. Risk assets go up, crypto goes up. Risk assets go down, crypto goes down. Maybe eventually it's a debasement hedge, but I don't think that that's really kind of the bulk of it. And, when you got Bessent, I think he said that on CNBC or one of the major, business publications. I think you really have to take a step back and say, well, who's the audience of all of those? Bessent is talking to very particularly the business class on, Wall Street has done pretty well. Time for Main Street to win. You've got obviously, the crypto side of it with, let's bring them in. Let's have a conversation. Let's hear what they want. Let's make some of the regulatory changes. Those are structural changes. Those will ultimately be what matters. The markets are short term. The policy and regulatory changes are long term. And so I think broadly, like when you hear these differing messages or potentially like counter perspectives, you kind of have to take a step back and say, okay, well, who's the audience for that message to be delivered? And so, yeah, I think broadly speaking, they're able to say multiple things at the same time because they're just trying to win collective support, because the biggest hurdles for them are still ahead of them. Getting elected was number one, but getting what they expect will be probably the largest either collectively tax cut, immigration reform, and potentially spending cut perspective, it still has to be done. Like that's going to be a massive bill. Even Elon Musk yesterday after the State of the Union was like, I think we can get 60. Like that's top of mind for them right now as to how they can get the things that they want to get actually done and implemented. And so if it's 51 and they've got the 51 in the Senate, that's reconciliation, but it comes with a bunch of controls as to what you can put into that bill. If it's 60, you can put a lot more into it, and it doesn't have to be budgetary in nature, and it doesn't have all the controls in place. And so it's kind of like they're still playing the political game right now because they haven't done anything yet. All the stuff is still in flight.
It's unclear to me. Yeah. I mean, you hear all these headlines coming out about Doge. Some people really love it. Some people hate it. Different numbers. It's still unclear, right, what the ultimate impact of this is going to be. And, it's so in addition to the spending cuts, there's also the tax cuts and the
Right.
tariffs. And it's unclear how all of these things are going to interact one to one.
Right.
I actually didn't know this, that the US didn't have any form of income tax until the late 1800s. And it was all tariff driven at the time, which is
Yeah, obviously an extremely different global
completely
economy and
different.
very different market, and very different in terms of how the U.S. was playing in that global economy. But it is
Definitely.
true. Yeah.
But actually, in different periods of times, this is actually relatively persistent throughout history, where you have like large, empires or governments that actually didn't have income tax. And they had a totally different revenue system. Roman Empire had the same thing. They didn't have any form of income tax for a very long time. And maybe the through line there is that if you're a larger part of the global economy or something like that, you might not need it. And maybe we're just too global today, et cetera. But I think that this administration has signaled that they're going to try very different things, right? Less orthodox economic policies, social policies, whatever it is. So ultimately, I guess we're going to have to see how successful these tariffs are and whether or not they can offset the, tax cuts, right, for the deficit, right? Like those are all the three kind of options that you have.
Right. And because it is such a new perspective, a new policy regime, that's what's giving everybody, including and especially the institutions, pause.
Yeah.
And I had dinner last night with someone who works at a large prime in the crypto space who interacts with many institutions and many governments all over the world. And the perspective that we were both kind of sharing, that we were both seeing, is essentially like governments and institutions. If you just think about kind of like the timeline of when all this started to happen, the like starting gun was the election results, and the election results being done and settled. And you know in previous election cycles we had recounts, and so maybe we didn't know exactly what was going to happen in terms of who was going to be in the Senate, who was going to be in the House, et cetera. That all got cleared up by the end of the year. But by the end of the year, institutions are taking December off for the holidays. And then it's like, okay, in January, we're going to have a bunch of meetings and we're going to sit down and be like, okay, who's doing what? What's going to be our strategy? Let's go off and build a committee to decide what our crypto strategy is. And you're starting to see that with things like Vlad from Robinhood coming out and talking about tokenized assets,
Yep.
and how crypto is going to be the back end for Robinhood. They just added Arbitrum a day or two ago. Like they're making moves, but we're in March now. Stripe, in their letter that just came out, had a huge section on stablecoins. We talked about this last week, but obviously they are focused on this category as well. But the institutions who are potentially looking at this from a buying perspective were probably ready to go in February, maybe a couple of weeks ago. But with everything selling off, they're just hands off the wheel. Let's wait and see. Let's take a couple of weeks, maybe a couple of months, and we'll jump back in when we're ready to go. And so I think that's broadly where we are in the market and the market structure. But it doesn't mean that they're not coming. It's just a question of when. And I think moving some of this uncertainty away and getting rid of some of the uncertainty is going to be part of that catalyst. The other part of it is just like, these institutions aren't going to go chasing price down. They're also not going to go chasing price up, but they're going to wait for things to settle before they start to make moves. Obviously, once they start making moves, price may go up, and that may drive further moves. But that's kind of generally where my understanding is of where we are in the market. All this stuff is really positive. But the other thing I'll say is, and part of the reason why I think 2025, if people are trying to pattern match, will look very, very different from 2021, is that, once again, the most positive potential thing to happen are the two market structure bills. One's the stablecoin bill, and one's just called the market structure bill. Stablecoin is probably a couple of months away from realization, and maybe we'll see a draft sooner than that, and we'll see how it goes through committee and goes through voting. Market structure, which is in my mind much bigger, and stablecoin really just provides market structure for what stablecoin assets and stablecoin issuers are going to be able to do. Market structure is going to basically be for every other asset. This is the FIT bill that passed the House in May of last year. What's a commodity? What's a security? Who's the regulator in charge? What's decentralized? What's not decentralized? What are the disclosure requirements, et cetera, et cetera? All of that is probably going to be in the second half. But once that happens, that's like, if the election was the starting gun for all of these institutions to look at this industry again and legitimize it, I think the market structure bill will be the starting gun for all of these things to actually come to realization.
Yeah.
And if we're just getting started in the second half of this year, 2025 is not going to look like 2021.
Yeah, I agree. The other way that it's not going to look like 2021, I think that the era of everything go up together is probably like the easy money, right? All you have to do is be there for the shitty times and then hold literally anything. I think it's done because even in an environment where you have really good transparency into what's a security and what's a commodity, et cetera, at some point more sophisticated investors are going to come into this space, and just valuation is going to be a problem for a lot of these protocols, right? Like,
so what does that mean? Well, my base case is that means retail is probably going to look very, very different this time around. It's not going to be your average person or friend or family member who's like, I just went and bought, X, Y, and Z on my Coinbase app and I just made $10,000. Congrats. It's going to be for a more prosumer or professional audience who actually understands these protocols, is spending 24/7 looking at them, just in the same way that people who, I can't remember the exact stat, but like day traders, I think make money. Like 20% of day traders actually make money. And
it's maybe even less. I think
maybe even less,
yeah.
but like a very insignificant percentage of people who actually day trade actually make money.
Mm-hmm.
And I think the market structure will ultimately end up in that direction as well, which is you got to be like really on the spot with your understanding of this. You got to be reading the governance forums. You got to be talking to the team. Fortunately, all this stuff happens in the open because it's all open source. But it's a full-time job if you want to do it. And maybe some whiz kid in college who's spending all of the excess hours being able to actually go deep on this stuff will be able to build interesting perspectives and investment theses around it. Frankly, just like you had in the early days of the hedge fund world, which would be, you find these little pockets of people who are really talented and analysts and they can understand it and they can, build a defensive strategy. But I think that's where you're going to start to see this industry move. It's not going to be like hopefully gone are the days of the cab driver, talking about crypto and all the things that, they're trading.
Yeah, I was listening to, I can't remember, it was one of these more Web 2 focused podcasts where they were talking about crypto, and they brought up the point where even some of the most sophisticated investors based out of Silicon Valley have trouble outperforming the S&P 500. And it turns out that investing in early stage startups, even if you are really intelligent, is really, really difficult, and most people can't do it successfully. And so at the base of crypto has always been this sort of philosophical question for me is, imagine two scenarios. One, which you have a little bit more of a nanny state where you police what people can invest in, which leads to better outcomes for the average person, or one where you let people invest in whatever they want and it leads to worse outcomes for people. Which would you choose? And ultimately, right, this is a question that governments and regulators have to wrestle with across any different number of sectors. Do you let everyone eat whatever they want? Mostly we do. We do let people eat whatever they want, at least in the US. People are allowed to put more stuff in the food than in Europe. But I mean, that's kind of what it is. I think it actually is just a philosophical question where it is pretty likely to me that if you let people invest in liquid early stage startups, most people won't do well in that environment. I still think you should be allowed to do it, but I can see the argument, at least on the other
side. Well, I fundamentally and philosophically agree that we need to be able to give access to people who want to be able to do this. Mm-hmm. And look, it's not like people are going to, and part of the Fit 21 bill was a limitation on how much money you could invest. So there are, ostensibly going to be limitations. So you're not going to be, refinancing your house and putting it into, some random token, or you shouldn't be. And I think you'll be prevented from doing that. But, look, what has happened over the last 25 years in traditional markets is that because of Sarbanes-Oxley, which was a recognition of all the accounting fraud that was going on in the 1990s and 2000s, it made the requirements to go public so high that it pushed basically the public offering threshold an order of magnitude higher. And there's the famous stories of like Amazon going public, I think with like a $300 million fully diluted market cap. Like, you don't have those opportunities in the public markets anymore. And so retail investors just haven't had access. And it's meant that, this entire industry called growth equity became an industry because of this, because companies are going public later. They need more capital to get off the ground. And it's just pushed it further and further to an institutional basis that has prevented individuals from having access to it. And I think that is fundamentally un-American. And broadly, I think crypto is a recognition of that. It's why people get excited about these token offerings and abilities to participate in them, because they get access to things that have real upside, especially if they have the time or the resources or the understanding to be able to participate in them. That's how it should work. And yes, we need rules, we need controls, we need regulations to know, that there aren't abject frauds going on. But once you have that clarified, it's sort of like a, eat what you kill type of opportunity. And that's what you had in the 90s. And there are so many hedge fund managers, because that was the typical format for investing in these assets, because they'd be, 100, 200, $400 million companies, where a hedge fund would be able to go in and invest in it because they actually read the technology and understand what it is. The hedge fund world blossomed in the 90s and 2000s because of this fact. And I think that, so once again, I think it will become more of a prosumer model, where retail will still be participating and still be a major factor. It's just going to be, it's not going to be your average person who's spending, an hour a week doing this and kind of like putzing around, or they will, and they'll just do it in the major assets where they know a buy and hold strategy is going to do just as well. So I kind of see the market shifting in that direction, which ultimately that'll be a good thing. But this is going to be the place where crypto is going to be the place where if you want access to early stage liquid technology investing, this is the place to do it.
Yeah. It's funny. There's a little bit of an irony here, because, everyone complains so much about public markets that it's just the Mag 7 and the big guys just keep winning, and that you haven't been able to be an active manager for such a long time. And it's these structural reasons. They point to something like, passive and ETFs, and they just gobble up, all these assets, and they're not discerning, yada, yada. But it's funny because, in crypto, which is one of the less regulated markets, in the world, there aren't these like structural ties like there are these structural factors like there are in more traditional markets. It's kind of the same thing, right? Like, it's also, even though it might in theory be like a stock picker's dream, it's been actually really hard to outperform the big guys, right? Like Bitcoin and Ethereum. So there is some kind of irony in that as well, right? Where it's in some ways a really great environment, in other ways like a wickedly difficult environment. And you hear all of these. Actually, I'd be curious to get your take on this too, because every once in a while someone comes out and says we need more liquid funds, like as if it's like someone was trying to shame Coinbase for not being a liquid fund. It's like, guys, come on. What do you?
Well, Coinbase is not a liquid fund. Yeah. Coinbase is a platform where you can trade these liquidly.
They were mentioning their venture fund. I think this was Foreman who was saying you basically invested early stage in 500 companies that you could just dump on investors later. And it's like, come on, guys, you have to actually create assets. No one is honor bound to support the prices of assets that they don't think are worth it. And
right.
That's a crazy perspective to me.
And this is what happens when you have early stage technology. It meets public market liquidity. Right. It's going to get wonky, and there's going to be feelings hurt. But I think, look, a couple of thoughts. The famous bet that Warren Buffett had, and I can't remember who he made it with, which was like, whoever wants to take this $1 million bet donated to charity. If you're a hedge fund, with who? Ted Seides? Yeah. Will a basket of hedge funds be able to outperform the S&P 500 over a 10-year period? Turns out they couldn't. No. And look, there's a lot of time variability in when this bet was made and how this bet was made. I think if you did it in the 90s, maybe it'd be different. But that's, once again, market structure dictates kind of like global asset performance over a period of time. And but at the same time, in the 90s, you had the Tiger fund, and then all the Tiger Cubs basically build their capabilities as Coatue, Tiger, like Maverick. There's so many examples of those funds that are still impressively performing right now that got their start in that market. And so I think yes, there needs to be more liquid funds. And I think that once the opportunity is becoming more clear, they will exist because the incentive structure will be there. And I don't know, when we started Framework, one of the things that we thought about was it's exceedingly difficult, if not impossible, to start a traditional venture fund from the start. you kind of have to find a niche or a perspective or a market where you're the expert and there is a gap. And it is like, you got to have luck and, performance and all those things just time up perfectly for you to be able to break through. And if I'm looking at the market right now and I'm looking at the opportunity set as someone who, understands technology, understands crypto, understands financial markets, I'm looking at this and I'm saying, I have an opportunity to go and start the next Kotu or Tiger or Maverick in the next 5 years. And that opportunity doesn't exist very often, but it does exist now, or it will exist, I think, by the end of the year once this, market structure bill goes through. And so I think, the liquid funds will come. Just to touch on what we talked about a bit last week, liquid funds, typically people say we need more liquid funds because basically they want, them to buy their bags. The biggest buyers of these assets are not going to be liquid funds, guys. The biggest asset buyers are going to be the protocols themselves that are generating revenue that buy back their own token. And so that's, I think, what everybody needs to be playing for. And once that happens, it becomes clear. You can use this fundamentals basis. Like, there's so many opportunities to look at these assets differently once you have that in place. All of this stuff will coalesce. I think it's just taking time.
Quick shout out to today's sponsor, Aries Markets. Aries Markets deployed on Aptos in 2022 and is now among the top 10 lending protocols across all blockchains with $280 million of TVL. Aries Markets has expanded its product suite to become a fully integrated DeFi hub combining lending, borrowing, and more. In 2024 alone, Aries introduced several new features to better meet the needs of its users, including native USDT support, an incentive program, and more. Click the link at the bottom of the show notes, head over to Aries Markets, and tell them that I sent you. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes. Okay, let's talk about buybacks here for a second. So one of the, we talked about this a little bit last week when we did our live podcast recording. And since we talked, I think ACI, the Aave Chain Initiative, run by Mark Zeller over in Aave land, has come up with a new Aavenomics proposal. And this was part of a larger overhaul. But the part that I wanted to get your, and we'll link it in the show notes here as well, but Aave prices, or the Aave token price jumped a little bit. And part of it, my hope would be, there's a very cool design actually called Umbrella, which is like an overhaul of how they account for risk essentially within their protocol, which is very cool. And I think makes a lot of sense, which you're basically isolating different pockets of risk and paying stakers in a more granular way. But the big thing that moved the price was the buyback announcement. So they announced that at least for 6 months, there's going to be a $1 million per week buyback, right? So you can add that up and that's relatively substantial. And after that, there's the creation of a new financial committee with, I believe, the ACI, Llama Risk, Chaos Labs, and one other entity. And then they're going to provide quarterly recommendations for token buybacks. So, one thing that I was curious to get your opinion on here is, if you look at, the analog of public markets, you kind of have a longer term sort of look through into either dividends or share buybacks. And, I would be curious how investors might underwrite, okay, they're doing a buyback, but it's for 6 months. So is this going to be a sustained pump? We have got really good visibility into 6 months. And then we know there's going to be some on a quarterly basis, but I don't really know how to value that quite as much. And then, how would an investor kind of think about or underwrite, okay, ultimately it's a startup. So, the confidence that the quantum of buyback here is going to continue to go up, or it could just go into nothing. So maybe I think this buyback is worth it, or maybe I think it's not worth it.
Yeah. Look, I think the best corollary example here is with traditional equities. And the two formats of delivering value back to shareholders is either historically through a dividend or through a buyback program. The dividend is an interesting one, and I think it's moved pretty significantly. I don't know what the numbers are, but I would imagine it's very much significantly shifted in terms of the amount of companies doing a dividend versus building a buyback program towards buybacks. And there's a number of reasons why, but I broadly think that shift is for the best for a couple of reasons. One, I think there's a tax element to it. Whenever you're delivering value back to shareholders in the form of dividend, there's immediate tax hit versus a buyback. And we'll see, exactly how the tax policy changes, but there's a much more limited tax effect, and it's not paid by the shareholders; it's paid by the company. The other element is once you start a dividend, and just because of the way the stock market works, dividend stocks are valued or looked at and evaluated separately from traditional stocks because they're yield generative. And people start to look at dividend stocks as yielding assets, which means that it's a very negative signal if you start a dividend and then stop it at any point, because people are owning these assets, they're holding on to them, and the opportunity cost of them buying some other asset, like an actual fixed income yielding asset, is high if there's the potential of that dividend being stopped. So once you start, it's very hard to get off that merry-go-round. Whereas buybacks have typically and historically been structured as programs on a periodic basis. And typically the board of directors will sit down and be like, okay, we're going to do $1 billion of buybacks this year. And they'll have to report it, they'll announce it. And what people will follow, or what investors will track, is what is that program ultimately building in terms of the aggregate size in the period. And obviously very positive when a company starts to do a buyback. The company also is literally buying back the shares and holding on to those shares. And so there's an element of the company thinks the stock is undervalued versus the psychological effect of the company doesn't know what to do with all this excess cash and it's just giving it back to shareholders in the case of a dividend. So there's a psychological effect as well as to what are you doing with this? But the company holds on to the shares and they can use them for stock-based compensation. They can use them for acquisitions. It's an asset that sits on their balance sheet. And so it's much better to, I think, be in the buyback world. But the corollary, I think, is, the best example is in traditional equities.
Got it. Okay. So you kind of just answered my question right at the end there, but why, maybe it's just psychological, but I'm struggling to see a little bit the difference in between, because if a dividend and a stock buyback are basically the same thing, one is just tax advantage versus the other. Why is it worse to discontinue a stock dividend, like a dividend, versus just end your share buyback program? Isn't that effectively the same thing?
So why is it worse to end a stock buyback program?
Or why is it worse if you were to have a dividend, why is it worse to end that versus having a share buyback program, which you can just end at any period?
Yeah. I mean, I think the biggest reason is because people hold dividend stocks like yield generative assets.
Yeah.
And if suddenly that yield goes from 4% or 2% to zero, people are going to sell your stock because it's not giving them any yield. They're holding it for that specific purpose. And so that's why I say there's a category of dividend yielding stocks that's very different. And that market structure is very different from how crypto works. But I think you can think about it in similar ways, which is if people are looking at this asset, let's say Ethereum went to, from 4% on average to 0.4%, tomorrow in terms of staking yield, there'll probably be a lot of people that stop staking. And so we can maybe think about it in a similar way. The buyback program, though, is there's just a very different financial equation that goes on in that you're buying back your stock, which means you're increasing the ownership of everyone else who's holding that stock. You're having a positive market interaction by buying that stock, and you're holding on to that stock in the treasury stock of the balance sheet to be able to be used for growth opportunities in the future. And so it becomes a productive asset as opposed to we're going to, give this cash out because we don't know what to do with it. And so it's sort of you view it undervalued. We want to buy this undervalued asset that we think will appreciate in value. So maybe our $1 billion of stock buybacks is actually going to turn into $1.5 billion of value that we can use productively in the future.
Got it. Okay, that makes sense. Desk is the leading perp dex built for both degen traders and AI agents, offering up to 50x leverage with a sex-like experience. To celebrate their launch on Base, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops, lowest trading fees on Earth with -1 BPS maker fee and 1.75 BPS taker fee. Desk referral program. The more people you invite, the bigger your rewards. To get started, click the link in the show notes below and make sure to follow @TradeOnDesk on X to stay updated. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today. All right, I want to get your opinion here on, so we're recording this on Thursday. Friday is going to be the first one of these policy summits. It's actually called Digital Asset Summit, which I talked to Jason. I was like, dude, I literally called it Digital Asset Summit, which is the name of
DAS part 2 in 2 weeks.
Yeah, actually, this is a good plug. Yeah, use Bell 10. Me and Michael and Vance are all going to be there March 18th to the 20th, the real DAS in New York. But we've got this policy summit that's happening which I guess is sort of a small roundtable of industry leaders. And I checked the list. It's a lot of people that you might think. There are sort of some of the more Brad Garlinghouse is going to be there. Some of the custodians. I think Nathan Diogo from Anchorage, the CEO of Exodus. I did see that Sergey Nazarov, a friend of the pod from Chainlink, will be there. And Shane Copland just announced that he's going to be there of Polymarket fame. But more on the centralized side of things, like more on the sort of companies in crypto. And, they're going to be talking about different things. And the 3 kind of big announcements that we've had from the last week is there's the strategic crypto reserve, which we haven't talked about, but that's the 3. They named 3 tickers: Solana, XRP, and Cardano, which everyone already knows what the reactions to that was.
He said that first, but then he walked it back and said, and of course, Bitcoin and Ethereum are going to be the core of this crypto reserve.
Right. And he especially went and called out that I think Howard Lutnick then went and clarified even that Bitcoin is going to be treated specially, or maybe Bitcoin and Ethereum or something, right? Some amount of this was walked back, but
yep.
But initially, at least, that was definitely very headline grabbing.
It was a fun Sunday headline to wake up to.
Fun Sunday headline to wake up to. And yeah, the entire move was given back. I think it was like 350 billion that got, given and then taken away in a relatively short period of time. Also not grabbing headlines here, but they're looking at that IRS rule, which would classify, wallets as broker dealers. So that's definitely very important. I'm just curious, we haven't really talked about the crypto strategic reserve. I'd just love to get your quick thoughts. We don't have to spend an enormous amount of time on it, but what you're expecting, I guess, from this.
To be honest, not expecting much. I think this just goes in my bucket of things that don't matter as much as everybody else thinks they do.
Yeah.
The perspectives of every single asset that's on that list or in that tweet is just immediately going to have a TWAP turned on and it'll be permanent buy pressure. No, that's not how this works. And and if you're expecting that to happen, you're in for a rude awakening. But I do think that this is following through from campaign promises. This is signaling to the market that they're serious. This is structurally good if it, at a minimum, is a limitation on government-owned crypto that then is not going to be sold and held onto into perpetuity. David Sachs actually had a really interesting tweet, which was out of all the Bitcoin that's been sold by the government, it was I don't know, a couple $100 million of proceeds. But if they would have held onto it now, it's $15 billion of value.
Yeah.
So case in point, that could have gone to much better uses had you not, desired to sell immediately. And I'm sure when they sold, there were prices that were lower, so they could make the argument, well, we sold at a higher price than they would have been otherwise. But look, if you just hold on to this forever, it's going to be an asset that you have on the government's balance sheet forever. So at a minimum, I'd expect that. At a maximum, I'd expect, inclusion and participation from other assets outside the ones that are included. I think the reason why all three of those were initially listed is that I think those are the three biggest US originated assets. So it does look like there's a focus on making US the crypto capital, as they've talked about. And I think that's probably the biggest signal that we can glean from all of this.
You know what? I was thinking this the other day because there's been a pretty big allergic reaction to some of these policies from crypto Twitter. And look, some of the I completely understand, right? Like we should not be putting, XRP or Cardano or Solana. I don't even think in a strategic reserve. Honestly, I'm probably in the camp that we don't need a strategic reserve, but it would be Bitcoin, if anything. Even then, I'm still not really on board with it. But either way, I think that's not great policy. But when I look at like these people don't know the crypto ecosystem and a lot of the ethos and the globality and all of this stuff. It seems to me like they're approaching it at least in good faith, in the same way that you might approach an industry, right? It's like, hey, to everyone in crypto, where the ethos is this is global and permissionless from day one. People kind of scoff at like American protocols, but like that's such a typical playbook, right? In any other industry, it's like we want this American made, and there is some amount of that I think does makes sense, right? If they want, like, let's just put yourself in the position of this administration. You want people to come and start these protocols from the United States. What would you do? I mean, this is part of the playbook. So, they might be approaching it in a way that's a little grandfathery for your taste if you're listening to this, but I think the logic is decently sound,
Yeah, I also understand the other side too, which is like the same government over the last 5 years has done everything in its power to drive all of these people outside the US. And so it's kind of like, oh, well, now you like us. But look, I see both sides of the coin. But I do think that, the biggest thing that they could possibly do, which is both on the policy and the regulatory front, is make the US the crypto capital of the world. And I think that that's, what they're aiming for.
Yeah. So, just to clarify, like I'm not a fan of this strategic reserve. I think it's silly, but I do think some of the policies that they're trying are, look, heart's in the right place. Like I love the US. I would love to live here and, have the freedom to, just like we'd be operating from any other part of the world. So I feel like.
Exactly.
Okay. Maybe the last story, I would love to just get your take on. So the Ethereum Foundation, there were a couple of big switch ups at the Ethereum Foundation, or both in general.
Let's call it that.
Yeah. So we've got two new executive directors. So Aya Miyaguchi, who's been the longstanding executive director of the Ethereum Foundation, stepped down. She's now the president. And now we've got two new co-executive directors, Xiao Wei Wang, I think I'm pronouncing that. I'm sorry if I butchered that, and Tomas Stankzak. Sorry, these are tough names. But anyway, Tomas, I think, has been getting a lot of the energy, is maybe a little bit more well-known. He's a pretty well-known operator from the Nethermind side of things, so very steeped in the technicals of Ethereum, but also, from everything that I hear, like kind of a workhorse and a great executor as well, which is awesome to see. And they're going to be splitting responsibilities. So I think I saw this get outlined in a tweet from Tomas, sort of clarifying a little bit about the leadership structure, which is that the vision is still going to come from a combination of Vitalik and Aya. So I guess she still has a significant role to play in the EF. And then the strategy is going to come from kind of the board and executive team. And actually, Tomas and Xiao is going to be more on the executing side of things, which I thought was interesting. And then in terms of their direct reports, there would be freedom to, based on your management style or whatever, direct reports can kind of choose who to roll up into. And the other big piece of information here is that Danny Ryan, who I think there was kind of a grassroots push around to take over as the executive director of Ethereum, has gone over to Etherealize, which is more of this maybe institutional sort of marketing arm for Ethereum. So
yeah, look, I think Etherealize, and I'm sorry, I can't remember the guy who started its name.
Vivek, I think.
Vivek, right. So I think Etherealize is maybe a realization of what I would say is the like multi-year too early ideals of the Enterprise Ethereum Alliance, if everybody remembers that.
Yeah.
And it's going to be the BD, the partnerships, and the institutional connection to the Ethereum chain that I think has been lacking. And so the realization, and there was also this talk of, is Danny going to become the new executive director of the EF? Is he going to move over there and take over for Aya? And I think what I am most excited about of these changes is the separation of concerns of what seems to be basically like the business side and like the technology side. And historically, these have been completely connected. As soon as the EEA went away, it was kind of like, all right, EF is doing everything. And that obviously has come under flack in recent months with, I'd say, not as strong of a perspective on the business side or the institutional side. So, look, I think this is a great move. I think I still have questions as to the like move to president and like co-executive directors. Just sounds complicated from a governance perspective. But it's an open source foundation, and maybe this is the right model of governance that they feel they need. I have no insight into the inner workings of how they think things are working and how this would be an improvement. But in a way, it kind of feels like, like red flags in my mind are when we see a company that has co-CEOs, never works. And when you have a CEO who then becomes like the executive chairman, but still has like things that are in the day-to-day operations role, like that also never works. So you usually have to have one person at the helm, and I'm sure they'll be able to figure it out. And it's a different structure than a company. But it was kind of interesting to see that on the EF side.
Yeah, I have the same opinion there. And, I'm saying that from the perspective of essentially a co-CEO relationship with Jason. It works to a certain scale, right? And then it just doesn't.
Right.
So it depends on how the Ethereum Foundation sees its scope. I think, every organization is completely different. Every leader is completely different in the relationship. But I agree with you that I actually just didn't think the optics almost is like what people really want is honestly the market. It feels like the market is just crying out for like make some decisions. It just felt so indecisive. It probably wasn't the best optics here to do a executive director relationship.
That's a better way of describing what I was saying.
Yeah, it's just that's not what the market wanted to see. So we'll have to see. I think also that we're probably at a point where what is required to shepherd the Ethereum ecosystem to success today is maybe not what it was 5 years ago. And I just went on a rant about this, but there's an analogy here to maybe like a Bell Labs or Google in its early days, where the challenge for Google was just making sure the internet worked. And there were all these like just same way there were 5 years ago. We didn't know how to scale blockchains, right? Like it was still very theoretical and research oriented at this point. So it was a really good high ROI use case for Ethereum, which essentially was crypto at that point. It was like 9 out of 10 devs were in the Ethereum ecosystem to just solve these big scaling challenges. So research was very high ROI. Now it's like you kind of have the broad strokes, right? We know how we're going to scale blockchains. It's zero knowledge, it's rollups, it's some combo of IBRL, data availability sample, like whatever. The big paths are kind of laid there. And now maybe it doesn't make as much sense, to be investing quite as much in research. And the Ethereum ecosystem is a smaller overall portion of a much larger industry. And so the challenge now is like, how do you do go to market? How do you, educate the institutional audience about Ethereum? How do you go out and compete and win for different app developers? It's like, just like any organization, right? The challenges from a leadership level change and evolve as the organization changes and evolves. And so
extremely well said. I think I have the like sneaky suspicion or kind of like the spidey sense that like the power or sort of like the gravity of the Ethereum ecosystem is much less on the EF side as compared to the Etherealized side now. It's like that's where things need to be going. I'm very excited that Danny's heading there. I'm very excited about all the stuff that they're doing. And I think I don't know if this came to reality or fruition, but like there was some talk that he was going to go to the event tomorrow at the White House.
That'd be great. Yeah.
But, it doesn't matter to me as much, the open source technology side and the governance structure and what they want to do there. They know what's best, but I don't think that that's the priority for Ethereum at this point. I think the priority is on the ethereal side.
Yeah. So it's great to see like an organization that's completely dedicated towards that. I mean,
right.
I don't know Danny. I don't know Vivek. Actually, I've heard great things about both. So, right. I'm really hopeful that it's a successful endeavor. And also, we have to remember, I know we've talked about it on this podcast, but Joe Lubin, the role that he's historically played within Ethereum. And, maybe one way to think about this as, we're moving on to the commercialization of the technology part of this industry.
The EEA was just 7 years too early.
Yeah. They were like so many things in crypto, right? Like there were so many things that were just a little bit too early. And to bring this maybe full circle and back to ETHDenver, actually, I think it felt to me like people were a little bit lost. Like there was a feeling of, okay, we're still kind of talking about the same stuff that we were talking about last year. There've been some incremental improvements, but it hasn't really translated into as many users as we might have wanted. And, I think people, like, one of the great parts about this industry is that it was, founded around this very libertarian sort of, ideological bent, and you got to kind of get nerd sniped and deal with these very heady, very interesting infrastructure challenges. And I think we're around an inflection point here. I don't know if it's today or if it was 6 months ago or if it's in 2 years, where those challenges have largely been solved. And what's required now to take this industry to the next step is the commercialization, the operators, the less of the tinkerer founders, more of the like growth, scale, go to market type founders. And so I think that's necessarily left maybe some people feeling a little bit, I don't know, lost, or, like they're not really sure what comes next. But I think that actually the very beginning of the really exciting build out of this industry is just beginning to happen. Like, I'm wildly optimistic about where we're going.
100% agree. I also think, just like as a thought piece, what do you think the sentiment would be like in the industry right now if one of two were possibly the case? Either prices were 2 to 3x higher than they were right now, or two, this was all private companies and there were no prices. And like, imagine the sentiment difference in either of those two cases. And so I think there's just the sentiment, and like the vacillations of sentiment are probably like overdrawn just because of the way that the public liquidity and token price factors into all of this. But I do kind of wonder, like, any other industry that's having an ETHDenver equivalent conference is probably much happier than we are, just based off of where the market is, because you don't have that day-to-day feedback. And it's like everybody would be so excited about the progress and the changes and the regulatory stuff and like everything that's going on everywhere if we didn't have, the price tracker on our phones 24/7.
Dude, that's so true. Because it's so easy to imagine, right, what it would be like if prices were just higher. Obviously, everyone would be really happy. But I think if no one could see the prices, then it would be probably much more happy too. And there's a great like Cliff Asness quote about this. He started AQR, and he used to, because he got mark to market every hedge fund, and he used to rail at the private equity guys, and then I forget, I'm paraphrasing here, but he eventually realized it's a feature, not a bug, right?
100%.
Yeah. So yeah, I don't know. I also think that maybe to end on a positive note here as well is that whenever there's one of these, you're at some sort of inflection point, or there's change, or people are feeling like, there are a lot of people that have been kind of like OGs that are burning out and leaving the industry and feeling uninspired. And that, if you are younger, kind of on the come up here, that's room for you, right? To have and if there are pockets of people, like I ran into a lot of the people that I ran into at ETHDenver were like, a little burnt out, a little tired, but there were a couple of people who were really excited and had fresh perspectives. And the alphas just find those people, or try to become one of those people that's really excited about something, and just double down and put your head down for 5 years.
100% agree. And I would just tack on that, delete the price tracking apps on your phone and don't check price and don't think about price, because progress is happening, and price will catch up eventually. But it's exciting times.
It is. All right, man. This was a good one. Just lean and mean, just the top only.
Just top only.
All right, but I'll see you soon. Actually, we'll see you soon in person for DAS. That'll be fun.
I know. I'm excited. It's going to be great.
All right, partner. Cheers. See you soon.
Later.